Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. I found the data that was released yesterday from the Association of Mutual Funds in India, that's effectively the mutual fund body, quite interesting. This is data for the month of January that showcased that 24,000 crore rupees of inflows came through into gold ETFs. We spoke about this yesterday. But what was also interesting to me is that only about 800 odd crore rupees went into new fund offers. There weren't too many of them, and this is specifically new fund offers in the active equity space. The overall new fund offers was less than 2,000 crore rupees of inflows. And if you look at what you saw through 2025, then a number of NFOs were very significant. Maybe the quantum was not as much as 2024, which, as you probably remember, was a bumper year. What are the trends that emerge if you look at the NFOs, and what should your approach to NFOs be on new fund offers? This is when a new scheme is offered for the first time by a mutual fund house. I'm joined today by Santosh Joseph, the founder of Germinate Investor Services. Santosh, thanks so much for taking the time. It seems like mutual funds are taking a bit of a back seat when it comes to launching of new schemes. Do you feel that as well?
Yes, Alex, and it's very evident in the way we saw 2025 calendar year play out. In fact, between 2024 and 2025, the collection in NFOs actually fell dramatically. From 118 lakh crore in calendar year 2025, we dropped to closer to 80,000 crore in calendar year 2025. It shows that even though the number of NFOs were higher, but the amount of money collected in 2025 was lower than 2024. Clearly shows that the appetite is coming off a bit, though the sheer number of schemes have gone up.
The amount was what, 67,000 odd, 68,000 crore?
Yes, in 2025, even that number is staggering because even though the number of NFOs were more, the standard collection just dropped a little bit. The appetite for equities dropped a bit. Because also, let me tell you, on the back of strong performance in 2024, many sectoral and thematic ideas caught the frenzy of investors. If you can remember the defense scheme, the defense theme, the whole manufacturing theme was very, very, very big in 2024, and a lot of FOMO around that space.
Yeah, let's, at the start of this conversation as well, talk about new fund offers and what they are, and what you need to bear in mind when you are going in and looking at a new fund offer. And of course, a lot of the old hands at mutual funds at this point will be saying, come on, this is basic stuff. But a lot of people get into this space and are wondering what this is about. So you want to explain how new fund offers work?
Yes. So for the investor who's hearing this, a new fund offer means it's a new scheme launched by a mutual fund company on a particular theme, on a particular scheme objective, usually relevant to the market at that particular point of time. Now, why are there so many new fund offers? There are two parts to it. One, a particular company deciding to say that, hey, there is a particular theme that is doing well. For example, financial services, or maybe manufacturing, or maybe even IT services. Now, when they launch a scheme, you are saying that maybe this particular mutual fund company is giving me an opportunity to buy this particular idea. Therefore, you will come out with an NFO or new fund offer. Now, why are so many new fund offers coming? The reason is that there are so many mutual fund companies and all of them have the bouquet or a bandwidth to launch. Now, there's also another part that there's a clear scheme categorization that flexi cap, multi cap, small cap, mid cap are very distinctly clear in their approach. But when it comes to thematic, when it comes to sectoral, every AMC can have one. Now, a simple thing, when you talk about, let's say, the banking and financial services, almost every mutual fund company has got a banking and financial services fund. Now, if a mutual fund company does not have, that's when they come out with a new fund offer. So for an investor, a new fund offer is nothing new as a product or a category. It is new from the mutual fund company. Now, if you trust the mutual fund company to be a good hand at that sector or at that category, that's when you subscribe to a new fund offer. Not to be taken into the FOMO of saying that, hey, this is a new fund, if I don't put my money, I miss out on the opportunity.
So is there an advantage, Santosh, from a cost perspective to subscribe to a new fund offer? Because people tend to liken this to an IPO where they expect, and a lot of people wrongly also get into IPOs purely anticipating a listing pop. But they get into new fund offers also thinking that there's an advantage because the NAV is displayed as what, 10 rupees, right? So is there an advantage?
I'm sorry to pop the bubble, but there is no distinctive advantage on an NFO. Now, in an IPO, the company is raising capital. In an NFO, we're raising funds to be invested in companies to generate return on the benefit of the investor. So therefore, even though it may look like a 10 rupee NAV or a 10 rupee initial priced offer, please be aware an IPO is not an NFO and an NFO is not an IPO. They are two distinct parts. Buying a 10 rupee NAV may seem psychologically good or feel better, but even the NAV is not a guarantee of future performance or the strength of the scheme or the idea that you're buying. Now, from the cost perspective, I think the regulator has done a great job in terms of controlling or maybe putting guardrails around the cost. Costs are directly determined by the volumes of money that the fund collects. It's very simple. The larger the fund, the lower the expense ratio. On the contrary, sometimes small schemes tend to be a tad more expensive than large schemes just because of unit economics. Finally, when you choose an NFO, please remember, you have to check, is there another scheme already present in that category and what is the returns and what is the outcome? For example, we spoke about banking financial services. Are there already other banking financial services? How long have they been present? What is the track record? What is the size of the fund? How does this new fund offer be better? Now, for starters, the reason why it's better is because you may feel that the fund manager's got a little leeway in buying over a staggered period of time. But for that, you are better off finding an existing fund in the same category for your portfolio.
Okay, so a couple more points that I want to get through, and then we'll talk about what your learnings from last year's NFO activity was, right? And first of all, NAV, we kept talking about NAV. The tendency is to use these acronyms. This is net asset value. And simply put, it is the per unit value of whatever mutual fund you are subscribing to. It's the number of units, of course, that you buy, but it's the per unit cost of that mutual fund scheme. It also captures the cost that you incur when you're investing as well. But let's talk about a couple of aspects, as I said, Santosh, which is that in certain scenarios, just like we talk about market cycles, there are a few schemes that tend to look better than others because they were launched at an opportune time. So if you look at certain flexi-cap funds, for example, they might look better than certain multi-cap funds that transitioned from being the old multi-cap to flexi-cap. So how do you understand whether to go in for a new scheme relatively? And in your opinion, is it better to wait for a little while before jumping into a newly launched scheme and not at NFO stage?
I think you make a great point there, Alex. The entry point for an investor is the most important because two funds, whether they are existing funds or one fund being existing and one fund being an NFO, the material difference that begins at the point of inception is at your point at entry. You are right. Even the funds that transition from old multi-cap to flexi-cap or the new multi-cap or flexi-cap funds that were launched, I remember very clearly there was one NFO of a multi-cap fund that happened during October of 2023 when the initial outbreak of the Israel-Hamas happened. It was such that they got the fund closed on the 22nd or 23rd of October, and that's when the fund's NFO also closed and they collected a lot of money, and that fund had got a stellar performance against same fund on the 1 year period. Now why this happened is because at the point of entry, in one, the fund was fully invested even before the incident and the market correction happened. In the other, bulk of the funds came when the markets bottomed out due to that correction. So for an investor, entry time is important, and especially if you're going to be sensitive towards the entry point, it's better to stagger your investment at least for a few weeks, if not for a few months. So therefore, even an NFO, please be mindful of the valuations and the entry point. Now, more often than not, NFOs come around when the previous category has done phenomenally well. We've seen that with multi-caps, we've seen that with flexi caps, and now we've seen that even with gold and silver.
Yeah, in fact, I wanted to ask you about that, right? Which is the recency bias generally tends to play out. And let's face it, mutual funds, and look, you don't blame them because they are effectively manufacturers of product and they need to produce those products that are trending at that particular time because ultimately they are doing a business. So if everyone's geared towards banking and financial, for example, or consumption as a theme, then you will tend to see more of those themes being launched by the industry. Whereas if you're not seeing too much interest in IT, then you're not going to see those schemes either. But the tendency, Santosh, is to go after something that is a fad. Is that a problem? And you made a great point on gold and silver.
So let's again begin with gold and silver. In 2025, you had many funds come out with gold and silver. And the reason is there were people that were wanting to park money in gold and silver. The minute an AMC came out with gold and silver, let's accept there is some ads, there is some communication, there is some media representation. Now people are connecting the dot. Their desire to invest in gold and silver on the back of returns, on the back of news flows, and a particular mutual fund company launching a gold and silver fund. Now, when these two come together, it is an opportunity for an investor to say, hey, I wanted to invest in gold or silver, and here is the fund that I like, launching a gold and silver fund, and the meeting point happens. Not to forget, even the mutual fund companies are in the same framework saying that, hey, there is a category that there is an appetite, let me offer it, and let me see how I can manage this category or this segment differently or better.
Okay, all right. Let's run through some of the learnings that you got from the NFO activity as well, Santosh. And you briefly talked about a few of those aspects, which is that a lot of people were a little disillusioned by the performance of the equity markets in 2025. And I think the mutual fund industry appreciated that fact, which is why you didn't see too much of funds being raised, right? So what did you see that stood out to you when you look at the granular details?
So first, I think the flows are directly momentum oriented. When the markets are doing well, you have a month-on-month positive market movement. Flows tend to be robust. Investors tend to, park in more money in the hope and the belief that next month will be better and they will make even more money. When the markets kind of cool off or consolidate, even the investors tend to, curl back and not put more money into equities. So now this scenario, even the mutual funds realize there's no point in doing a new fund or raising capital when the investor's appetite is weak. Clearly, 2024, 2025, just these 2 years have made this point very visible. The momentum of the market and the momentum of the fund flows are directly proportional. The second part, which is really heartening to notice, we began 2025 with a cautionary note whether the SIP investors will actually subdue or retract. That has been a very, very robust number. We've consistently grown, we've consistently progressed to the point that in December 2025, we were shy of 30,000 crores of monthly collection. We started Jan with over 24,000 crore of monthly collection. We ended December closer to 30,000 crore, which means that the investor looking at SIP is really come of age, and they do not connect month-on-month systematic savings to the momentum and the way the markets function. They've come off the short-termism to build long-term wealth.
This is a good sign. Thank you so much, Santosh, for joining in and for speaking to us on Your Money Matters.